What's up, my Yugi Bros? I'm your host, the one, the only, the RJB0. Today, I want to try and explain something that has been very, very relevant recently. This is one of those time-sensitive videos that I was talking about, where things have come up very recently that I would like to talk about now, which is why I'm actually coming back to YugiTube, despite having said that I'm basically quitting in order to talk about them, because these are things that have been very helpful for me playing the game. Have allowed me to sustain most of my Yu-Gi-Oh habit off of the Yu-Gi-Oh cards I already had or the budget that I already had for Yu-Gi-Oh. And it has to do with investing in the game. Now, Yu-Gi-Oh! Is not an investment, it's a game. And though it is also a collectibles market, which means that it has commodity value, things like that, a Yu-Gi-Oh! Card is not a good thing for investment. It is generally very high risk, very low reward, and it's very unpredictable as a market. Not only is it unpredictable in that cards can suddenly get massively hyped, but it's also really unpredictable in that Konami makes decisions that we do not find out about until they decide that they are going to market a product or they're going to release a Forbidden Limited list to the public, which makes the market extremely volatile. However, I have been experimenting for a while with a set of investment practices in Yu-Gi-Oh! That have at the very least allowed me to sustain my playing of the game just based off of a very particular Yu-Gi-Oh! Budget. Now, I totally blew that for YCS Seattle, but I super wanted to play Zoo, and I did not have the time to do this with Zodiac, but there were a couple of cards that I purchased with this idea in mind. So I am going to take you to the whiteboard, which is why I'm standing and wandering around my room, or my living room. I'm going to take you to the whiteboard and I am going to show you some graphs that I think explain three different types of cards and how their demand changes over time. Now, demand, for those of you who know anything about the very basis of economics, demand is it is a direct corollary generally with price. So if there's high demand for a card, then it tends to have a very high price, particularly if there is a low supply. Now, I can talk about supply in the future because supply is extremely important when deciding what cards become expensive and what cards stay low, or what cards become low in the case of reprints. But for the most part, there are these three different types of demand function when it comes to Yu-Gi-Oh! So I'm going to take you to the board now, and we're going to talk about those. And in future videos, if there is enough demand from my audience, I will talk a little bit more about other topics that are available in this region of thought when it comes to investing in Yu-Gi-Oh! Let me switch to the board now. So here we have a whiteboard with many, many lines, and these lines each represent a different type of demand function when it comes to Yu-Gi-Oh cards. Now it looks extremely confusing, but I'm going to focus on them by color for a bit. And each of these types of cards has kind of its own unique function to it. So I'm going to start with the blue lines up at the top here. These are the high dollar cards. These are things like Pot of Desires, Pot of Duality, really the pots in general. A Dimensional Barrier is a great example of this, where the card starts out with a very high price, if we consider the y-axis here to be price in dollars. A very high price, and continues to generally have a high price just because it is a difficult to get card and it is very popular in the game. Now, these tend to just start off high and very, very gradually, as you see here, as they continue to be used, they tend to go down in price very gradually, as I just said, just because the supply becomes greater and the trade market becomes more competitive. Which means that people are less willing to just buy just to be able to get it because they can wait for a better deal usually, which means that over time the card tends to go down. Now you see this dotted line. Each of these dotted lines that you'll see throughout this video represent a possible alternative. Sorry about the shaky camera here. I have shaky hands and there's no way to do this without my holding my camera. So what we see here is this dotted line up at the top. This is the first of our alternate routes. Now, there are some cards like Tour Guide from the Underworld that start off fairly high priced, but then at their first event where they are used, they go up massively in price. So you can go for, in the case of Tour Guide, from a $60 card to like a $150 card overnight. Now, these cards also tend to go down in price, but it takes them a little longer just because they're more expensive. The next zone that we end up with in this type of card is what I generally call the fall from grace. There is a time for most majorly popular cards at which they just tend to fall out of the meta. One great example is Pot of Desires. Pot of Desires for a while during the Zoo format had its kind of fall from grace, where people stopped playing it as much. It went from an $80 card to a $50 card, and it was largely because something happened that made it less popular in the meta. There are cards like Dimensional Barrier that experience this flat zone that we see with this dashed line, which is basically where the card at some point levels out at its price and doesn't really go down. Now, at the trough of this fall from grace is a very high-risk investment zone, because a lot of these cards have what I call the rebirth on the right there. Pot of Desires is another great example here. I actually got burned by this exact example very recently. There is a very high-risk trading zone right after the fall from grace, where you are predicting that there is going to be a rebirth, and sometimes that comes true. In the case of Pot of Desires, it had an almost $20 bump from the trough of its fall from grace to the top of its its rebirth. The problem with this is that high dollar cards tend to, especially after their first rebirth, get a reprint or a hit. This tends to absolutely tank the price, which is why this red zone over here is very high risk. If you think you can pick up a card at a very good price and then flip it fairly quickly before there's the opportunity for a reprint or a hit, that is something you can do. The problem is you can never predict when one of these reprints or one of these hits is going to come. Case in point, Pot of Desires came very early in the reprint season, since the promos for Megatins tend to come out a little bit later. I was actually in the process of making a deal for one of my copies of Pot of Desires when the reprint came out. So I really got burned for that, and it was because I thought that there was more time, that I was safer in this high-risk zone. You just really are very rarely safe in this high-risk zone where you think there's going to be a rebirth. Possibly there has been a rebirth or a resurgence in the price of this card, but it tends to come with a reprint or a hit. So these high dollar cards, as you see in black up here, I tend to exclusively say you should, as I say, buy to use. You get it only if you are going to need it for an event. You pick it up by trading for cards you already have or buying out of your budget, and then you get rid of it as soon as possible because it's not an investment piece. There are cards that can be investment pieces. There are a couple of exceptions to these lines that I'll talk about at the end that tend to be high dollar cards. These tend to be very collectible things. One thing, that a card that has so far seriously retained its value is the Ulti Trishula Dragon of the Ice Barrier. Trish is a popular card, and also the Ulti is a difficult rarity to get. It's, as John Moore likes to say, it's an out-of-print rarity, basically, and it is the highest rarity that you're going to get out of a Trishula, besides the dual terminal one. So that one has generally held its price, despite the fact that it's gotten a couple of reprints. Now my roommate's about to come in, so you're about to hear the noise from the door, So I am going to move on to the next set of cards. I'm going to look at these purple cards for a while. These cards are a bit of an anomaly because they don't experience a lot of the fluctuations that the other ones do. This line in purple are the cards that I would generally call the hidden gems. These are things like Denko Sekka, which I cannot believe to this day was a hidden gem, considering the fact that it was a walking cold wave. But Denko Sekka, for a very long time, was a $5 card. This was amazing to me. I bought like 10 of them as soon as the card came out because I knew that it was going to go up in price. What these cards do is generally they stay in what I call the low zone for a while. The low zone is an investment area where if you think that a card is very good and at some point is going to hit its stride in the meta and hasn't yet, that's a really important stipulation there. If it hasn't hit the meta yet and you think that someday it is going to get its time to shine, this is an area in which you can pick up cards where it's very low risk and also very low reward. I mean, until something happens. That's what we're going to get to in a second. But I'm going to start off the purple cards, these hidden gems, by noting that a lot of the time, right when a card is released, it's much higher price than it is very soon after its release. Star Eater is a great example of that. Star Eater was like a $40 card right after it came out, but it quickly fell down to $20 once supply evened out with demand. So that's what these hidden gems are, and when these hidden gems, they go in this low zone for a while, and then they get something special. They get a first event where somebody realizes that they're good. Now, there are a couple of things that can happen after this first event. Usually there's a pretty major bump in price. Now, what you really have to do as a discerning investor is decide whether it is a part of this hype zone here, where a card gets its first event, and it gets this very high price boost, but it isn't real. It isn't a real change in the meta. I'm trying to think of a really good example for this, but there are quite a few things. One of the things we call like the Billy Break effect is a great example of this. Frequently, cards that Billy Break uses get a huge amount of hype right after the event, and then go down very quickly in price. Then there are this dashed line up here, which is where after their first event, they actually gain more of a surge in demand than expected from the event. Which is cards like Denko Sekka is another great example. Denko Sekka, after its first couple of events being used, became more and more and more relevant to the meta, and so it continued to go up in price. Most of these cards, though, tend to, once again, steadily go back down in price after their first bump. This is another one of those things, as I say in the black here, that this is the buy to use zone. If you don't go into the hype, which you should never do, you should never buy things right at their initial price jump, you can get these, use them, and get rid of them and be absolutely fine, but these are rarely things that you should invest in. Now, the cards that are actually weirdly the best to invest in are things that have the potential to support other cards. Now, this is the zone that I hang out with the most. These are the types of cards that I'm the most interested in. Once again, they tend to start higher than then go down after the set is released. A couple of them are these hidden gem type things where they start out low. During the low zone, if you think that there is going to be a card that if a certain type of support came out, would be very useful, that is a time that you can pick that up. The problem with these support type cards is the low zone is a much riskier place, in that if you never see support for a card come out, then you never actually get the value that you looked for out of that, and you end up having a dead thing in your binder. There is another zone, though, which I will get to in a second, which is my favorite place to invest with this type of card. The low zone is really down to discretion. If you think that you're not going to have that sitting in your binder forever and that someday some type of support is going to come out for it, then that may be a time to get it. So then the big thing happens. Support is announced. We get something from Konami, we get a leak or something, and demand suddenly skyrockets for that card because that card seriously supports this particular set or this particular archetype. Now, this once again gets us into what I call the no-go zone. This red area, right when we have this initial price hike, is a time when you should never purchase a card. I don't care how expensive you think it's going to get, because if it gets really expensive and continues to go up, usually you can tell that that's going to be a thing. If it gets expensive and continues to go up, it's likely to continue going up after that. So if a card survives hype and continues to go up in price, hype was still not worth it because you could continue to invest later once it has shown itself to be real without putting yourself at risk of having this massive price crash that hype cards tend to have. Now, the next thing, this is the most important thing that I can tell you about. This is the area in which I have been practicing the investments that I've been making. I call this the safe zone because there are two places that cards tend to go. Now, the most common one is that when support is announced, if it is real support, and I will make a video in the future if y'all want me to, about what realness in a support card means, it will tend to get a price hike right here, a big bump, and then it will continue to go up in price until it is first released or until its first event. This is a very common thing. You can get cards in here and you can have them as a very good investment for the future. A great example of this from recently is Ignimazid the Vanisher, the True King card. We started to see the True King Dino decks being very popular in Japan a while back. Once that started happening, we saw this kind of price jump in Ignimazid from like a $1 card to a $5 card. Now, the thing about Agnemazed is that it was never hugely hyped. It got that market bump, but then it continued to go up in price for a while. I purchased my Agnemazeds at about $10, believing it turns out correctly, and I'll talk to you about it why if you want me to in the future. This has to do with realness of support, that it would continue to go up in price. I purchased it in this safe zone, even though it didn't have this big bump and then fall, which some things have that I'll get to in a second. It really just had this first bump and then continued to go up in price. When it comes to support cards that become expensive, this is the most common thing that happens. Now, I call this a safe investment zone because you know if this is real support, that if it is going up in price now, it is going to continue up until the card is released and possibly up until the card's first event. So this is a very safe zone to invest in. It is very low risk and it can be very high reward. The reason why these cards are so much farther down the graph than those high dollar cards is because they tend to be low dollar cards at first, and they tend to continue to be low to mid-level cards afterward. The reason why that is so important, what makes the safe zone, is that they have a high dollar increase in price, or a mid-dollar increase in price, which is a huge percentage change in price. And when you're dealing with something like eBay or TCG Player, having a huge dollar or percentage to dollar change in price is really important because they aren't going to take a flat dollar amount off the top. They're going to take off a percentage. So if a small dollar increase in the price of a card has a high percentage increase in the price of a card, then that's way better than a high dollar increase in the price of a card and a low percentage change in the price of the card. For instance, a $1 card that becomes a $5 card is a much better change than, for instance, Pot of Desires, which was a $50 card that went up to being a $60 to $65 card during that little resurgence that we recently had. The reason being because you have to pay less to sell them. So that's why these are so low and why this safe zone is so low risk and so potentially high reward, even though these cards tend to be lower prices. If you pick up a playset of them, or even more if you want to hold on to them to use, then you are likely to have a fairly good profit off of it, even if you have to sell it through something like eBay or TCG Player. Now, the real unicorns, the things that happen every great once in a while, and these are my favorite ones, are the ones that dip in price after the initial hype boost, but then start to go back up in price and eventually are just as expensive as your standard safe zone card. This is the best type of investment. And learning which cards do this is really down to experience, learning a couple of rules about them. Once again, if you all want me to talk about that, I can in a future video, but these are the best types of cards to invest in this safe zone. Once again, there's this no-go zone, and once it has hit its trough and started to bump up in price, that's when you're starting to get into the safe zone. Once you see it start to increase in price again after its price crash, which happens in basically all cards, but the bump doesn't happen if you have a pure hype card, that's where you really want to invest. And that's when, after you get into that, you get into your buy to use zone. Because if you're buying for an investment, it's very rare that something continues to go up in price after its first event. But after that, things tend to go down in price. You buy them if you need to use them. You flip them when you don't need them anymore. Now, a lot of cards can go into one of these categories and then come out of it and become another card. A lot of high dollar cards, for instance, have a massive fall from grace after a reprint or a hit, especially a reprint, and later become one of these green support cards or a hidden gem or something like that. But the best type of card to look into is these green support type cards, and you really want to try and invest in that safe zone. Now, I can talk about that more in the future. I'd love to. This is the kind of thing I love to talk about, and I'm an absolute nerd about this kind of subject. But this is really the way that I have been recently building the binder that I have that allows me to play the game without putting any new money into the game, with the exception of Zodiac format, just because I wanted to play that deck so badly. So let me know what you think down in the comment section below. If you have any questions, let me know, and I will try to answer them as quickly as possible. Meanwhile, thank you all for watching. I'm your host, the one, the only, the RJB0, and I got a jet. See ya.